I'm very fortunate to have a fantastic panel. We've got a fantastic wealth of experience sitting on our panel here and some great expertise. So my role, I guess, to all the entrepreneurs sitting in the audience and the SMMEs is to try and extract some free advice for you while you consider your listing process, as cost is obviously of key concern to most. So what I'll do is, instead of, we obviously have been advised that we're short on time, so I'd ask you to please have a look in your programs to get an introduction to each of the panelists. I'm sure most of us sitting in the audience are well aware of who's up here. And Mr. Mahang, I'd like to actually start with you. In terms of the listing process and strategy, one of the barriers that we have, you sit as a shareholder, as a manager. What are some of the key concerns that you have when you consider listing, and how does this prove a barrier?
Thank you very much. I hope everybody can hear what I say. I think one of the barriers for listing for SMMEs, and we must admit and accept that in Botswana, almost all the companies are small companies. Large companies are very few. In fact, as Jeffrey has said, what we consider to be giant companies or big corporations in this country, in other countries like Germany and America, they are small companies. And Stacy actually confirmed that a company with a capital of 50 million is a small company. Here it will be one of the giants. And possibly you can say it's a medium company. But I think that's one of the barriers that we have. Government, I know, in this country has succeeded in trying to assist small companies. In fact, companies in the country. Unfortunately, the assistance was for small macro companies, which themselves will take a number of years for them to grow up. The responsibility for BSE and government is really to try, by all means, not only to provide assistance, but to grow the SMMEs. Because any of the larger companies, as you have said, being retail or consortiums, in fact, when they come into this country, considering that it is a small country in terms of population, simply just swarm the market. And smaller company will be finding it difficult to grow and continue to be small. The second barrier that I see is the fact that the cost. When you are a small operator and you consider the cost of bringing about a contingent of professionals like lawyers, financial advisors, transfer secretaries, and so forth. This is onerous to a small operator who has been running, to all intents and purposes, a very small company. Apart from that, as someone has indicated, small companies start with family companies. And family companies, of course, do like to control. Sometimes it's very difficult for a family company to certainly bring foreign operators into your company. And consequently, that's one of the barriers. The important things that I see myself is for growing the companies. Government does assist companies to establish, particularly in the green fields. But government doesn't follow up. In fact, having been in government and at one stage being the chairman of an organization like CEDA, the amount of assistance that companies get is too small. In fact, I'm not quite sure how many companies that we assisted at the time have grown up to list in the stocks. They have remained small. I know companies, some of the companies start small. We have our Choppies, for instance. We started as a family in Lobatse company, and suddenly as a small company, as soon as it caught up, it ran faster than most companies. It's a bigger companies is able to even invest outside the country.
So Martin, just building on what Mr. Mahang saying there in terms of size of companies, obviously it's an issue that I think is a recurring theme. So in terms of our current listing requirements, could you just give a bit of insight into what are the listing requirements in terms of size of company for both our main board and venture capital board? And obviously it's encouraging to hear that, we will have an SMME board, but for the companies that I guess who are sitting out there now who might be considering listing, maybe just give a bit of context around that for us.
Thank you very much. I think, in my opinion, I must say, I do not actually believe that our listing requirements are all that onerous. We can rattle a few numbers here to answer your questions directly. And because if you look at, the minimum, float that must be made available, for the main board, that's 30%. For the venture capital board, that's 20%. And if you look at the minimum number of investors, when that company, lists, for the main board is 300, and for the venture capital board is 100. And then you can also go into some financial requirements as well. Subscribed capital for the main board sits at 5 million pula, and it's only 250,000 pula for the venture capital board. And for the minimum number of shares in issue for both is the same at 1 million shares each. Obviously for the main board, there is a requirement for a 3-year profit history audited. And, the last preceding year should have a minimum profit of 1 million pula. And the last financials should not be more than 6 months old, preceding the listing. On the venture capital board, there's no requirement, for audited results. All that is required is a 3-year business plan, sound business plan, and forecast, 3 year out. But I think, okay, let me also add that, for the venture capital board, there may be, just because of the nature of the asset or the investment that is being brought to the market, there will be some additional requirements that are placed primarily on the promoters, which you don't necessarily get, which are not applicable, obviously, to the main board. And the two key ones there being that, the promoters must actually deposit 75% of their holdings onto the CSD and actually freeze them for a period of 2 years, within which they may not trade. And I think all this is actually very important because, when you talk about, the companies that would ordinarily list on the venture capital board, this is all done, Dr. Jeffries, to address a key issue, to protect, those investors that, we don't want to create an impression that, people who are coming in to bring these medium companies are bringing there with the primary and sole reason of, realizing value so fast that as soon as the company is listed, they can then bolt to the next exit. This is to tear them down so as to also build confidence, to the shareholders.
So Martin, in terms of your, I guess if there's a barrier to listing, if we're sitting with, SMMEs sitting in the audience who are going, well, actually, I'm a little bit unsure of whether I'm going to meet the spread requirements. From a broker's point of view, and involvement in the listing team, how would you help an SMME to address this barrier? What comfort could you give them?
An earlier speaker spoke of the need to, a key component of actually listing is, starts with appointing the right team of advisors. Chief among whom is a sponsoring broker. And because it is our business to, at least to profess to know, where the capital resides, and it is very important that as sponsoring brokers, when we actually advise the companies to come and list, we take the mantle of actually identifying, the kind of investors that will, one, assist us in getting the required amount, that is needed in terms of the listing, and also to, and also to, to bring the number of, to meet the requirements of the minimum number of shareholders.
Mr. Mahang, I think you wanted to pitch in.
No, I wanted to say that until such time that CPD can come home as proposed by the BSc or introduce a junior board to the senior one, where the regulatory machinery or the rules of the BSc will be lowered in terms of the capital requirement, in terms of the requirement for the profits that would have been made. Actually, in other words, the history part. For instance, in India and other countries, for instance, possibly the requirements of the capital will be about 30% of the senior board, and possibly the annual fees, which may amount to 200,000, would be reduced to about 10%. That way, the requirements that are needed in the BSc are reduced tremendously in the junior board or with CPD as they propose to do.
So I think we're all pitching up that cost is obviously a key component, not just from an SMME point of view, but also from from an advisory and from a compliance. So actually, Rizwan, one of the questions that I was going to direct to you was in terms of costs. You obviously you've got a wealth of experience in various listings. Could you maybe just take us through some of the costs besides the actual listing costs? Because, you're sitting there as a CEO, you maybe don't, you've not gone through the process before, you've not got the hindsight of how much this process is going to cost you. And so just that perception alone can be a barrier to listing. Would you mind
Sure.
going into a bit of that?
No, sure. So thank you. Look, the whole area of costs, is understandably one of great concern and indeed importance to a prospective listed company. And I think that, and this really underscores the point, and, I applaud the BSc in looking into that direction of a CPD or a junior board. But where we stand right now, I think it's fair to say that these costs are quite significant. And, it's a fairly complex and involved subject, but I think in the time available, what I'd like to do to demystify it, if you will, for the audience, is really to look at it as costs in two distinct phases. So the first phase is in relation to what I would call the pre-listing or preparation period. And now this is where you've touched on it. What does a CEO or a prospective family owner, prospective listee say to himself or herself about this? The key point here is that it's the phase when the company and the shareholders and the management of a company get themselves ready for a listing. So what are the costs in this first phase? Well, typically, and if we have time later, I'll speak about restructuring, but typically these involve restructuring what you currently have and any other related companies into a group structure with the attendant tax issues that come with that. We've heard a number of our guests this morning speak about improving governance standards, perhaps by appointing non-executive board members. Of course, adopting recognizable, acceptable financial reporting systems and the like. And generally, and I think this is a point which is not really focused on, generally I think working on what I call the story of the company. What story are you going to tell the market? I think Dr. Jeffries is right when he looks at it from the point of view of investors. What are investors looking for? What's your story? What's your track record? And really, you've got to focus on those things. And of course, there are costs associated with that. Because outside of a Tsipidi, and as we sit here now, looking at the main board or looking at the venture capital board, there's little point in bringing a company to the market if it does not have a story to tell or a track record to glean from, because otherwise institutional investors will not necessarily support it. So costs, we've heard about advisors. Yes, the costs in the first phase will typically relate to the appointment of a financial advisor, a legal advisor to assist with the restructuring and governance issues, and possibly a marketing consultant to help you with getting your story together. So the key question, of course, is, in the first phase, what do such costs amount to? There's no real hard and fast answer to this because the cost will, of course, depend on the stage at which your company is or the complexity that you need to call upon to resolve in order that you are listable. Clearly, as Ray Masunga has said earlier this morning, I mean, if you are BTCL, you have a whole host of stakeholders that if you're a private company in the ordinary course, so to speak, you wouldn't necessarily have. On the other hand, if you're a private company, we referred to Choppies, where before it came to the market, you had over 60 subsidiaries which needed to be restructured, or with a Far Property company, the same sort of thing. Clearly, with regard to those companies, the work involved is more expensive, clearly, and time-consuming. So how do you go about minimizing the costs? So really, it's all about negotiation with your relevant financial advisor or your relevant legal advisor. Now, I think it's fair to say that the more skilled and experienced an advisor is, the more likely it will be that there will be a cost to pay. But perhaps it's a truism, and I guess I'm serving myself here, but I'll just be open and disclose it. You're probably likely to save yourselves more money if you appoint people, professionals who have been down that particular road before. There's one veteran practitioner in this area, who I think is in the room, who has often said, well, it's not about knowing the road, it's not even about knowing how to travel on that road, but it's about knowing the cracks that are on that road that you can then avoid, and the pitfalls and the potholes on that road, which I guess is topical after the visitation of Dineo to our parts recently. So that's the first phase. Just very quickly on the second phase, because I know time is of the essence. The second phase, so I've spoken about the first phase. The second phase is the phase leading up to the listing itself. Now, there is a lead-in time there, and typically outside of very particular examples, you're talking about 6 to 9 months. And now this phase involves the real, what I would call hardcore work in relation to the listing. That's the preparation of the prospectus, the legal document by which you will be selling your shares to the public. And that's typically handled by lawyers and the financial advisors, which will also include a due diligence, which can also be done in the first phase. And then in that same period of time, of course, finessing the story, which can be handled by your PR company, and reviewing and reporting on the financial accounts, which is the job done by the reporting accountant. So the point I'm getting across here is the second phase involves quite a large team. Added to that team will be a sponsoring broker who is required in terms of the BSE rules. There will be a transfer secretary who will handle the initial transfer of shares and then the ongoing allocation and transfer of shares and then the ongoing costs in relation to dividends and so on. There will be a receiving bank to receive your money. So all of these things, and including then consultations that are necessary with the BSE, it's a process. It is not inexpensive. The BSE itself also has costs, which I have to say are relatively nominal in context, of 0.0255% of the total market cap, with a ceiling of 200,000 pula. And then brokers, of course, will charge 0.85% of every transaction that they handle. Now, quickly, there is in fact guidance as to the costs in relation to this phase. And I think I'm comfortable in saying this because I see everyone is sitting down, so you don't have to sit down when I tell you these figures. But here goes. These are for, I must add, main board listings, and this is the costs for the entire listing, including all the advisors that you will come across. So just looking at the last several listings, Wilderness, for example, was 13.5 million pula. These are main board listings. Choppies 1, I call it. Choppies, when they came to the Botswana Stock Exchange, 9.5 million pula. Choppies 2, which was the secondary listing on the JSE and the migration to the JSE, 20 million rands. The FAR Property Company, 10.4 million pula, and BTCL, 14.5 million pula. So, look, for a main board listing, Michaela, in 2017, you are looking roughly at between 10 to 15 million pula, in my view. If one looks, however, at the venture capital board, there the last listing was, and we've had representatives here this morning from Affinitas, that listing cost, in terms of the disclosure made in the prospectus, 2.4 million pula. Now, can you reduce these numbers? For a main board listing, I doubt it very much. However, with regard to the VCM board, by whatever name to be called in due course, and of course, once the BSE's great initiatives on SMME boards come to fruition, there should be, in that context, a much reduced barrier to entry. And then just lastly, can you help minimize these costs along the way? And the answer to that is absolutely. And here is where the management of the company can play an absolutely significant role. Ensuring that you do attend all the meetings of the advisors, ensuring a proper flow of information to the advisory group, and the meeting of all deadlines. It's really very much like, I guess, being a good patient with a doctor. If you disclose fully what ails you in every corner of your body, the theory at least is that you should receive comprehensive treatment sooner, better, and faster. So that's it, folks. I mean, it's been a very quick whiz through some reasonably complex stuff, but these costs, outside of what is to happen as they currently stand, are not insignificant.
So I think, Rizwan, it's been useful you highlighting, obviously, that, and I don't want anyone to fall off their chairs. It is an expensive process, but I think, like Rizwan said, is there are things as management and as directors of the company that you can definitely do to reduce these costs. And, we've all worked as advisors together on listings before, and we've been through that process. So I think there's just a few key things that I'd like to touch on in terms of, in our experience, where we've seen that probably work can be done before the process starts, so that actually when we come through as advisors, and we are just selling ourselves here, away from work a little bit, I guess, by giving, the advice, is that, there's some things you can put in place prior to the listing process even commences, so that when we come in, our work is reduced. Do not use this against us necessarily. But maybe, Jay, you can touch on one of the things that we see in Botswana a lot is related party transactions. So you've got a company, or a group of companies, and there's transactions between these various companies, and they're not formalized. So in terms of our listing requirements, obviously, they need relevant disclosure. Could you maybe explain from, an investor perspective and a financial reporting perspective, why this proves itself, one, a barrier to listing, and two, how we get around it?
Yeah, see, the related party transactions, as the wording indicates, it is the transaction between the company and the related party. And now one comes to a question as who is a related party? And definitely a related party, when you talk about the substantial shareholder or any relatives of the shareholder or anybody who the major shareholder has influence on, even though they might not hold any shareholding directly. Now, this you can say is a very broad definition of a related party. And invariably, in the process that Rizwan touched upon earlier, in that process prior to the listing, there is so much that gets done. And as you go ahead and do it, let's say a businessman has built an empire, and he has built various assets, various companies, and when you talk about the listing, then you have to sit down, structure them, and put them together. And when you do it on all in one course, there are many related party transactions that comes to the fore. And it is important that when you go into a listing process, it is not only the timely disclosure which is important, it's also the transparency which is important. And when you talk about the transparency aspect of it, you need to make sure that you have to protect the shareholder or the potential shareholder, that you're getting value for what you're paying for, or that when you tell the story has to be reliable, and so you want to get your money invested in there. As a result, there are specific criteria and specific procedures that one needs to follow when you talk about a related party transaction. So it's not only the listing requirements which say what a related party transaction is, it is also governed by the IFRS, the International Financial Reporting Standards, has major disclosure requirements from a related party transaction. So when you want to create a related party transaction, you have to make sure that the valuation of any property or a company that you bring onto the table is proper. You engage the right kind of advisors who are able to put a proper value to it. And when you're talking about independent expert opinion coming on, the independent expert opinion must be able to look at the value put on it and be able to give a fair and reasonable statement onto whatever you do as a related party transaction. And more than that, when you've been used to dealing in your own businesses, and as a medium-sized business coming on, you're not used to talking about your deals to anybody, or you're disclosing, as Ray Mahang said earlier, you don't talk about it to anyone. But in this case, any transaction which has got a related party flavor to it, you have to talk to the Botswana Stock Exchange in the first place, and then take the guidance in terms of what you need to be disclosing and how you're going to disclose it to the investing community. And there you have proper guidelines to help you do that. And also, in terms of the related party transactions, you will be able to see that when the empire is built and the structuring has been done, the party has gone in for listing. And then after some time, then you're looking to acquire another business that you had built on the side as you built your empire. And then that's when the related party transaction comes to the fore, where you're coming in and saying to the investors who have invested in your company already that I'm going to be buying another company of mine, or where I'm a major shareholder, or where I have promoted that. And that's where you need to bring in as much transparency as possible. And you have seen that enough and more in Botswana when you talk about many of the companies that have been developed. And invariably, at some stage or other, you got a related party transaction happening. And so it's not a daunting task. It is an aspect where you become a celebrity when you list a company in Botswana because of the small size of the market. And so everybody is watching you in terms of what you say, what you do, whom you talk with. And that is why the transparency becomes even more important. And when you talk about a related party transaction, that you're not taking anybody for a ride. And so as long as you have the timely disclosure, have the blessing of the Botswana Stock Exchange in terms of what you're doing, and come out clearly, then you tell the right story to the market for them to be able to come up with the money and invest, even though you have related party transactions involved.
Thanks, Jay. So I guess along the lines of telling stories to the market, Martin, maybe one of the things that you can speak to us a little bit about is the financial forecasting in terms of what we put in the prospectus and the story to tell. Because a lot of entrepreneurial businesses that we come across have, the knowledge is sitting, in senior management's head or possibly in the shareholder's head, but it's actually not been formulated either into a strategy or they're not used to forecasting. And the minute that we obviously have these discussions with them, it can become quite sensitive because they need to go into quite a lot of detail. And so that can be a bit of a perceived barrier because they're nervous of putting it out there to the market, although it's a requirement. But from an investor's point of view, how can this be a barrier to listing if we don't get it done?
Yeah. Let's first understand that when you bring your company to list, like Dr. Jeffrey said earlier, you expect that on the other side, there'll be people who will be buying, that stock. Those people called investors, need information, readily, very accurate information, which can actually help them take sound investment decisions. Okay, so that information is very, very critical because you see, without that information, that investor will not have the confidence that what he's buying into will actually bear, fruits in the future. What my colleague here called the investment story. When you buy, into anything, you need to know what exactly you are buying into. The investor needs to know how the company makes business. It has to understand the industry that it's in, that it operates in. The investor needs to understand, what that particular company that is seeking his funds to invest in competes against. So all of those information, the strategies that the company employs, in competing with its competitors. So the business cycles, et cetera, et cetera. So the investor needs that information to be able to to say, do I put my money in this company or do I go and buy a competitor or even buy a company in a different industry? Now, when it comes to forecasting, it's also important to understand that, when investors buy shares in the market, they are actually buying into the future earnings, of the company. You can look into the profit history. All that it actually tells you is that these guys probably are good at running this business. But one of the most overused thing in the market is that past performance is no guarantee to future returns. The profit history will just tell you that these guys on the balance of probability can probably run a company. But you really need to know, you need to look outwards, you need to look into the future to be able to say, in 5 years down the line, are these guys going to still be left standing? Will my money be safe? Will I have made any gains into it? So therefore, in actually asking them to provide those forecasts, it's a necessary evil in that it will actually, give the investor that much confidence that, they are buying into a solid business.
Thanks, Martin. I'm conscious that I've been nudged and that we're sitting with a very hungry audience, I think. So what I'd like to do is just give Mr. Mahang a minute just to, I think he's got a thought he would like to share with us, and then we'll quickly carry on.
Yeah. One of the things that I wanted to say in this country, we lack education. Our people have no background in education with regard to stock market. In fact, as Jeffrey has indicated, this only started in 1989. So it's hardly 3 decades. Young generation also, even in our present school, there are no commercial courses or business courses in our school. So people go into listing or other things without sufficient knowledge about stock exchanges. In fact, BTCL and recently BSC woke up. Until then, people didn't quite understand. When government recently started informing people on the radio to buy shares in BTCL and so forth. That's when say, what is all about that?
I think you make a very valid point there, and I think
Yeah.
I think the BSC are doing a fantastic job at trying to educate, our local business environment. And I think what I would stress is to anyone who's considering listing, you're sitting with a wealth of experience, up on the panel from, people who've set up their own successful businesses to various advisors. We charge by the hour, but we don't charge necessarily for the first sit down. So come and have a chat with us. And let us talk you through some of those processes, because some of these barriers are perceptions. They're not necessarily realities. And let's bring some more companies to the stock exchange, I think is the motto. Thanks, everybody, for your
Thank you.
time.